As of 12:17 p.m. Eastern Time on September 19, 2025, SoFi Technologies, trading under the ticker SoFi, is priced at $29.19.5, reflecting a significant intraday gain of 3.86%. This surge is not just a random market fluctuation, it's a culmination of a narrative that has been building for months, a story of a fintech darling attempting to defy gravity in a sector fraught with uncertainty. The immediate reaction from many watching this upward trajectory is likely one of vindication, a confirmation of the long-held belief that SoFi is the future of banking. However, the reality of the situation is far more complex and nuanced than a simple glance at a stock chart might suggest. The very factors that are propelling SoFi to new heights are also weaving a web of potential vulnerabilities that the market seems to be conveniently overlooking. This is not to say that the bullish sentiment is entirely misplaced, but to truly understand the investment proposition that is SoFi, one must look beyond the surface-level optimism and grapple with the underlying tensions that will ultimately determine its long-term success. The prevailing expectation surrounding SoFi is that it is on an unstoppable march towards disrupting the traditional banking industry. Investors are captivated by the company's vertically integrated business model, its rapidly growing member base, and its successful transition to a chartered bank. The narrative is one of a company that has successfully navigated the treacherous waters of the fintech world and is now poised to reap the rewards. This belief is not without merit. SoFi has demonstrated an impressive ability to attract and retain a loyal customer base, particularly among the coveted millennial and Gen Z demographics. Its all-in-one financial services platform, offering everything from student loan refinancing to personal loans, mortgages, and investment products through platforms like SoFi Invest, has proven to be a powerful engine for growth. The recent string of profitable quarters has only served to reinforce this narrative, leading many to believe that SoFi has cracked the code to sustainable profitability in the notoriously difficult fintech space. However, this is where the expectation begins to diverge from the underlying reality. While SoFi's growth has been impressive, it has come at a significant cost. The company's marketing and customer acquisition expenses remain substantial, and its reliance on the highly competitive and economically sensitive personal loan market exposes it to significant credit risk. Furthermore, the very bank charter that is seen as a major advantage also brings with it a host of new regulatory burdens and compliance costs that could temper future growth. The reality is that SoFi is no longer a nimble fintech startup. It is a regulated financial institution with all the complexities and challenges that entails. The market's current exuberance seems to be pricing in a flawless execution of its ambitious growth plans, while largely ignoring the potential headwinds that could easily derail its trajectory. A closer examination of SoFi's recent stock movement reveals a market that is highly sensitive to both company-specific news and broader macroeconomic trends. The stock's recent surge to a 52-week high is a testament to the strong investor confidence following its impressive earnings reports and positive analyst commentary. However, it's also important to note the stock's volatility, with significant swings in response to even minor market fluctuations. This suggests that a significant portion of the current investor base is comprised of short-term traders and momentum investors who are quick to jump in and out of the stock based on the latest news cycle. This can create a precarious situation for long-term investors, as the stock's valuation can become detached from its underlying fundamentals. The trading volume has also been notable, indicating a high level of interest and activity in the stock. Institutional ownership has been steadily increasing, which is a positive sign, but it's important to dig deeper into the nature of this institutional buying. Are these long-term, value-oriented investors, or are they hedge funds and other speculative players who are simply riding the wave of momentum? The answer to this question will have a significant impact on the stock's future stability. The reaction to earnings has been overwhelmingly positive, with the company consistently beating analyst expectations. However, it's crucial to analyze the quality of these earnings beats. Are they driven by sustainable, long-term growth in core business lines, or are they the result of one-time events or accounting adjustments? A deeper dive into the company's financial statements is necessary to answer this question. From a sector perspective, SoFi is benefiting from the broader tailwinds of the digital transformation of financial services. However, the fintech sector is also facing increasing scrutiny from regulators and growing competition from both traditional banks and other fintech startups. Macroeconomic pressures such as rising interest rates and the threat of an economic slowdown could also have a significant impact on SoFi's business, particularly its lending operations. SoFi Technologies, at its core, is a digital personal finance company that aims to be a one-stop shop for all of its members' financial needs. The company was founded in 2011 with a focus on student loan refinancing, and it has since expanded its offerings to include personal loans, mortgages, credit cards, investing, and banking services. A key differentiator for SoFi is its focus on building a strong community and providing its members with a range of benefits beyond just financial products. This includes career counseling, networking events, and other perks that are designed to foster loyalty and engagement. The company's business model is centered around its flywheel concept, where it aims to attract members with one product, such as a student loan, and then cross-sell them on other products and services. This strategy has been highly effective, with the company reporting a significant increase in the number of products per member. The acquisition of a national bank charter in 2022 was a pivotal moment for SoFi, as it allowed the company to take deposits and offer a wider range of banking services. This has not only provided SoFi with a low-cost source of funding for its lending operations, but it has also allowed it to deepen its relationships with its members. The company's technology platform, which includes Galileo and Technesis, is another key component of its business model. This platform provides the infrastructure for SoFi's own products and services, and it is also offered as a service to other companies, creating an additional revenue stream. Looking back at past performance, SoFi has a history of rapid growth, but it has also faced its share of challenges. The company went public via a SPAC merger in 2021, and its stock has been highly volatile ever since. The company has also faced criticism for its aggressive marketing tactics and its reliance on the personal loan market. However, the company has consistently demonstrated an ability to adapt and evolve, and its recent string of profitable quarters suggests that it is on a more sustainable path. For those looking at individual brokerage options, SoFi Invest is a key part of their ecosystem. Similarly, platforms like Fidelity, with Fidelity Investments and Fidelity Brokerage Services, and Robinhood, with its user-friendly Robinhood app, represent the competitive landscape SoFi operates in. Online investment platforms are becoming increasingly crowded, and SoFi's ability to differentiate itself will be crucial. SoFi's integration of various financial tools aims to provide comprehensive investment help, a feature also seen in Schwab Intelligent Portfolios. For those interested in self-investing and exploring various investing sites, the offerings from Interactive Brokers and the wealth management solutions from Fidelity are important benchmarks. Looking ahead, the future of SoFi is fraught with both significant opportunities and substantial risks. The company is well positioned to capitalize on the continued shift towards digital banking and the growing demand for personalized financial services. Its strong brand, loyal member base, and integrated technology platform give it a significant competitive advantage. The potential for further expansion into new products and services such as insurance and wealth management is also a major growth driver. The continued growth of its technology platform, which is already being used by a number of other companies, could also become a significant contributor to its bottom line. However, the path to long-term success is not without its challenges. The company's reliance on the personal loan market remains a major concern, and an economic downturn could lead to a significant increase in loan losses. The regulatory landscape for fintech companies is also becoming increasingly complex, and SoFi will need to navigate this environment carefully. Competition is another major risk, as both traditional banks and other fintech startups are vying for a share of the same market. The company's ability to continue to innovate and differentiate itself from the competition will be crucial. Ultimately, the future of SoFi will depend on its ability to execute on its ambitious growth plans while effectively managing the risks that it faces. Do you believe SoFi can successfully transition from a high-growth fintech to a stable, profitable financial institution? Comment below with your thoughts. In summary, the narrative surrounding SoFi Technologies is a classic case of expectation versus reality. The market is currently pricing in a near-perfect execution of the company's growth strategy, while largely ignoring the potential pitfalls that lie ahead. While SoFi's progress to date has been impressive, it is important for investors to maintain a healthy dose of skepticism and to carefully consider the risks before making an investment decision. The company has the potential to be a long-term winner in the fintech space, but the road ahead is likely to be a bumpy one. The reality is that SoFi is a complex and multifaceted company, and a simplistic bullish narrative does not do it justice. A more nuanced understanding of the company's strengths and weaknesses is necessary to make an informed investment decision. The coming months and years will be a true test of SoFi's resilience and its ability to live up to the market's lofty expectations. For investors using platforms like Robinhood stock trading or the SoFi app for their online investing, a deep understanding of these dynamics is crucial for success. Whether it's through SoFi Active Investing or utilizing a SoFi robo-advisor, the core principles of due diligence remain the same. The broader landscape of investing sites, including heavyweights like Fidelity, with its extensive offerings of Fidelity ETFs and Fidelity mutual funds, and Interactive Brokers with its professional-grade Interactive Brokers trading platform, provides a context for SoFi's competitive positioning. The challenge for SoFi will be to continue to innovate and provide value in a market where consumers have a growing number of choices for their investment and banking needs.